Did you manage to stay awake? It was pretty boring, wasn't it?
Kate, really, there were three takeaways from trade today. And the first are the low volumes, the second was the China numbers, and third is the upcoming week, which is a pretty big one. Just focusing on the volumes first, and as you mentioned and your other guests have mentioned, it was an absolutely anemic day. To put it into context, $2.5 billion being traded on the market is the worst volume day that we've seen since the 1st of October, and actually the fourth slowest day of the year. So the fourth slowest after the 3rd of January, which was the first trading day of the year, the 6th of August, which was a bank holiday in New South Wales, the 1st of October, where only Victoria and Tasmania were trading. So really no reasons for those low volumes today, but it was very slow. Secondly, we saw some excellent China numbers coming out over the weekend. Those trade numbers, export growth of 9.9% and also import growth of 2.4% ahead of expectations. And yet we didn't see the material sector really react too much, and the Aussie dollar gains that we saw initially faded away. And if we have a look at the Aussie dollar chart, I think this tells the picture quite well. This is a 5-day chart of the Aussie dollar. And this is the weekend. You can see that after the weekend we saw the Aussie dollar shooting up on the back of those China numbers, but during the session today coming all the way back down again. And there's a lot of skepticism around these numbers, and that's because of the timing of the Golden Week holiday in China. So a bit of skepticism on whether these numbers were distorted by that week-long holiday in China and the lead up to those holidays, and whether it's sustainable. So we didn't see a huge flow-on effect for that material space, even though iron ore imports into China were at a 20-month high. Thirdly, it's going to be a massive week on the global front. We see the EU meeting on Thursday and Friday, China data dropping on Thursday 1 p.m. Eastern Standard Time. We'll see the GDP numbers, the retail sales, fixed asset investment, industrial production numbers, and of course US earnings season. And after Wells Fargo dropped 2.6% on the US market on Friday, we're going to be watching earnings results coming out from the likes of Citi, Bank of America, Morgan Stanley, Goldman Sachs very closely this week. So it is a massive week, but unfortunately we've started off pretty slow in terms of volumes. Hopefully it speeds up later on in the week.
We had out today some positive news both on the housing front and car sales.
We did see some good numbers coming through from the Australian Bureau of Statistics, and great to see some stocks reacting positively to those positive numbers. Both numbers coming in ahead of expectations. In terms of the housing numbers, we did see an increase of 1.8%, and that's a reversal from that loss we saw in the prior month. So a good result there. And we know that some of the building material stocks have been absolutely hammered over the last 52 weeks. So good to see a comeback in the likes of CSR, which was up by 2.1%, James Hardie, which jumped by 1.5%, and we also saw Adelaide Brighton up by 1%. We also saw a little bit of a lift in those property companies which are exposed to that retail space. So we saw Mirvac up by 2%, and we also saw Australand gaining 1.7%. And the car sales numbers, the motor vehicle numbers for the month of September, we saw a good increase there, up 4.7% for the month and up 14.4% year on year. And I guess some of the stocks that have been doing very well over the past 52 weeks are stocks like Automotive Holdings, which is up by 55% over the last year. And we've also seen AP Eager up over 55%, up around about 60% over the past year, and it of course has a key stake in Automotive Holdings. Today though, not a clear stock performance reaction there. We did see Automotive Holdings up by 2.2%, but APE going the other way. But some good numbers coming out domestically, and a little bit of a stock reaction in some of those stocks related to that news.
That news out of 10 today, still trying to offload that outdoor advertising arm, and it continues to hit potholes on the way. The stock down about 5% today.
Unfortunately, it wasn't a good day for 10. In fact, very close to the record low of 34.5 cents. We saw the stock finishing at 35 cents on reports that it is still negotiating terms about the outdoor unit sale. That's the iBusiness to Champ Private Equity, or the oOh!media part of Champ Equity. So this is a negative because on the 20th of July, we heard that a $120 million price had been agreed to, plus a potential $25 million in 3-year times. And now it does look like the numbers are being re-crunched there. If we have a look at the enterprise value to EBITDA multiple that was implying back in July, it was around about 9 times. So if we have a look at similar deals out there, we did see the APN outdoor unit going for about 7.7 times multiple, and we saw the oOh!media going to Champ Private Equity at about 8.5 times. So the 10 media did seem a little bit generous in terms of the multiples it was being offered at, but now it does look like back to the drawing board, back renegotiating, and the market certainly didn't like the sounds of that. So 10 down 5% today.